All right, so this video I'm going to talk a bit about the importance of financial statement analysis and why we care about it. So why do we care about financial statement analysis? Well, one of the reasons we have several reasons, and one of the reasons is we get to assess the financial condition of a firm by analyzing their financial statements. And that could be helpful to determine whether or not we want to buy the firm, whether our firm is healthy, if it's a customer, whether they're going to be able to repay us, if it's a supplier, whether they're going to go out of business. So there are all kinds of reasons why being able to assess the financial condition of a firm could be helpful. We also want to be able to determine if a firm is getting better or worse. So that could be for our firm or perhaps, again, a competitor or a supplier or customer. We want to assess that situation. Are they improving or are they deteriorating? This will also make it more possible for us to compare with other firms to determine, are we doing better than other firms in the industry, for instance, or is our competitor doing better than other firms in the industry, and so on. Another possible use for this would be evaluating investment potential. So I want to dig into those financial statements and figure out, just how profitable is this business? Does it look like that profitability is sustainable? Are they going to be able to maintain that going forward? And therefore, what are the impacts on possibly the value of the firm and therefore the investment potential of it and so forth? One possible reason we might want to look at this would be find the problems before they really blow up and become a problem. So maybe I evaluate a firm's liquidity and I can determine that they do not have enough cash and cash equivalents on hand, given the things that are coming due. Well, I might be able to assess that in some cases months before I have maybe a whole bunch of debt come due, and I can actually determine, hey, there's a problem here, and we need to address that problem. So if I'm a manager for a firm, I evaluate it and say, hey, we do not have enough money for these obligations that are coming due. We need to address that now. And that means that if I address it now, I might be able to head off a big problem that would ultimately really be an issue for my business. On the other hand, if I don't do a good job of that and I miss that and I don't do the analysis, well, when all those obligations come due and I don't have enough money to pay them, this is going to be a serious issue. We can also try to evaluate the suitability of prospective business partners, suppliers, customers, kind of see, does it look like they're going to be around for a long time? We don't necessarily want to do a whole lot of business with an entity that's about to go bankrupt if we're trying to establish a long-term partnership or relationship there. So that's important to evaluate. We also would want to determine what's possible from a strategic standpoint. So strategic possibilities and limitations. So if you're doing a strategic plan for a business and you're saying, all right, look, we need to buy this other company out. Well, if you do your financial statement analysis and you conclude, you know what, we do not have enough money and we are in debt up to our eyeballs. And basically, this is a bad economic environment for issuing equity. Well, that may sound like a great idea to go buy this other company out, but it's sounding an awful lot like you're just not going to be able to do it because you don't have the money on hand, and you shouldn't be borrowing more because you've already borrowed too much, and selling stock is out because maybe the economic environment is bad, and the stock market is in a bad place, and we shouldn't sell stock at the bottom. So sometimes the financial situation that you're facing actually limits what's possible, and so that's something that you have to be mindful of. You can have a great strategic vision. But if it's not actually something you can implement because of the limitations you're facing, then that's not particularly helpful. So that's something to be mindful of. Also, it is important to note in this context that different groups are using financial statement analyses differently. So for investors, the focus is upon determining the value of the investment, comparing that to the price, assessing the risks associated with the investment, and ultimately trying to arrive at some gauge or measure of the investment potential of the particular stock or bond or what have you. And so trying to determine, is this a good balance of risk and reward based on this situation? Managers are going to be looking at this a little bit differently because for managers, the focus is upon corporate decision making. So for investors don't get to change anything really about the company. Either the company looks good as an investment or it doesn't, or maybe you're not quite sure, you're on the fence, but basically you can't change anything. For the managers, you can actually implement choices that actually would change the financial situation for the business. So part of the focus, or actually a big part of the focus for the managers, is that corporate decision making of, all right, given where we are now and given where we need to be, what choices should we be making in order to improve the business and address the concerns that we have and ultimately walk out the strategic plan associated with the business. So for managers, it's a lot more about decision making. So if I determine that my debt ratio is too high from an investor standpoint, this becomes just kind of a question of, well, that poses a risk. Do I find this risk to be acceptable in light of the returns I hope to get? For a manager, if I conclude my debt ratio is too high, it becomes a question of, okay, so what do I do to fix that and to address it so that I don't have too high of a debt ratio going forward? How can I pull down that level of debt relative to my assets and so forth? All right, hopefully this video kind of gives you a little bit of a idea of the importance of financial statement analysis and why we care about it. Thank you so much for watching and have a great day.